To get straight into it, I'd like to ask the panel to briefly introduce yourselves, what you do, what the company that you work for does, and whether the SEC giving a nod on a spot ETF, this is the easiest question you'll answer all day, whether it's going to be a positive or a negative for Bitcoin overall. Christoph.
I'll start with that, positive. Good afternoon, everybody. Thanks for joining us over lunchtime. My name is Christophe Duracell. I'm a managing director at Numius. We are a diversified crypto investment firm, active across venture, prop trading, hedge funds, and asset management. Our asset management arm is called Fortius. It's backed by Schroders. And we've recently launched our first two funds, fund to funds, and a long-only product as well.
Thank you. Martin?
So Martin Bednall, I'm the CEO of Jacobi Asset Management. We launched the first spot Bitcoin ETF in Europe last month, listed on Euronext Amsterdam. And so in terms of the question about a spot Bitcoin ETF in the US, I think it's going to be hugely positive. And that's because I think the SEC will probably approve all the applications at the same time. I don't think they're going to want to give anybody first mover advantage. And I think what that will mean is because BlackRock is there in the mix, and this behemoth, they will put a lot of their power behind it in terms of sales and distribution to really make sure that they get the sort of go-to ETF, the default ETF. And so when, so my background is, I am ex-BlackRock, so I have some insight into this, in the fact that when Vanguard came to Europe with their ETFs, there was comments internally at BlackRock made that they wanted to kill the baby in the bathwater. And so basically not allow Vanguard to get any AUM at all, even when they were, don't let them get anywhere. So I think they'll probably go with that same approach. And if you've got the power of BlackRock promoting Bitcoin and digital assets, I think that has a major knock-on impact for other products, for other regulators to approve it, and just a real groundswell.
Thank you so much. Steve, can we come to you?
My name is Steven Schoenfeld. I head market vector indexes. We are headquartered in Germany and operate around the world. We have about $30 billion of licensed assets tracking our indexes, and we were a digital asset pioneer, launching our first crypto indexes way back in 2017, which is like 40 years ago in crypto years. We have very substantial capabilities in digital assets, a number of innovative products, and I look forward to speaking about those. We have more than 20 clients with products, including ETNs and ETFs on Bitcoin and Ethereum. As far as the approval in the US, I agree that it's very likely to be that all will be approved. I will disagree with my former colleague Martin. As much as BlackRock will try to crush the competition, it's going to be a very different environment because there's a good half dozen, maybe even 8 or 9 other firms deeply committed to tradable digital assets. They've all got applications in, and some are actually much closer to the crypto ecosystem than BlackRock. So I think BlackRock will be in for quite a fight, but that will still be very, very positive for the overall Bitcoin and crypto ecosystem. I think the AUM potential could double or triple the current amount of AUM in current Bitcoin products.
So, can I just add? So I've been working in ETFs for over 15 years, and there's never seen so much anticipation around a product launch, around a product approval. So I think it just all leads itself. And yeah, I mean, what you say is right. There's, I don't know, what is it, 14 applications or something like that?
Oh, and by the way, BlackRock didn't exactly crush Vanguard in Europe either.
No, they didn't. They weren't successful, but they tried. The point was that they put the efforts behind it. And I think, having so many, people coming to market at the same time, and having that battle, and what BlackRock will try and do in that battle. I didn't say they'd be successful. I said what they will do is, put their efforts behind it, and I think there'll be enough to go around for plenty of them. But if I was a betting man, they will have the bulk of the AUM compared to.
What do you guys think about? Sorry to interrupt, but I'm really curious about the timing of the application. What was it? Because you had all these beautiful bull markets. There were better times, to put in an application for a spot ETF than when BlackRock actually went ahead. So what do you guys think about that? What's kind of driving that decision?
Well, I think that, well, first of all, crypto markets as a whole, if you look 5 years, I don't know how long you guys have been in the crypto game, but if you look 5 years back, we would never have had a panel like this with this title. Okay, so crypto markets are maturing exponentially. I would say institutional investors are becoming more familiar with the asset class. So there's obviously demand from investors. But if you're an institutional investor, let's say you're an endowment or a pension fund that wants to put $2 billion into Bitcoin, up until recently, you would have to go through a crypto-native OTC desk or even do something a little bit bespoke with a crypto hedge fund. So it's quite complicated. So this is really like a really good access play to be able to launch a spot BTC product. The other thing is, I think maybe when it launches, things will be a little bit more nuanced than everybody's expecting, because, the assets that we're seeing in what I would consider maybe an inferior product, the derivatives-based ETFs, that where investors are penalized by the futures role up to 8% per annum, on Bitcoin. We're going to see a shift of assets from that product over to the spot Bitcoin product. So overall, I think it's, as I said earlier, it's super positive. Maybe a little bit more nuanced than people expect, but as a whole for the industry, it's very bullish.
And any thoughts on the timing? You think it's to do with the sort of maturing of the institutional appetite? Any other thoughts from you guys?
So I think 2 weeks ago I would have said 9 to 12 months away. This is for the U.S. approval, but sitting here today, I'd say it's closer 3 to 6 months. There, for the first time, it was just last week, the SEC, instead of completely rejecting the whole list, they've actually asked for comments, which is a marginal but significant improvement in the dialogue. There's also the Grayscale lawsuit, which the SEC lost, which means they're most likely going to have to allow the Grayscale, the GBTC, to be converted into an ETF. I don't think the SEC wants that to happen and then have the ETF filing still waiting. People should also remember the size of GBTC is over 20 billion, so that alone will be a huge contribution to the asset class. So if
there are no outflows.
Well, there could be, yes. Well, there will be outflows. People have been trapped in it, but they'd be outflows at NAV.
It's about 3%, right, of the
and if I had $1 billion in GBTC that's charging 2%, I would also move it to the Van Eck Bitcoin ETF, which is going to charge 65 basis points. So either Grayscale's going to adjust their pricing, or they will have outflows, but it will be in the ETF ecosystem.
So I agree. The mood music has definitely changed, right? From through the loss of the Grayscale case and the Ripple case. And I think your question though was, why an application now? The timing of the application, not necessarily the timing of the approval. And BlackRock has very much changed its tune over the years of it being Bitcoin being an index for money laundering. I think Larry Fink said that. I'm not quite sure how many years ago. To now him saying it's a global asset, a form of digital gold. So that's taken some time to get there, and I'd say that BlackRock are very close to the regulators around the world as well. They have a big team in their regulatory arm and talk often to the regulators. So they must be getting soundings there. And so, again, that's an indication of the mood music changing and the SEC getting closer to approving one of these, because otherwise BlackRock wouldn't have bothered.
I think you raise a really good point there, because there's a big focus on BlackRock you have to consider their connectivity. So you mentioned, they're close to the regulator, but also their connectivity across the investor space. Speaking with endowments, pension funds, etc. They're going to be, if they manage to launch the ETF, the sort of go-to shop to, help these people on their journey. Yeah, no, but help these allocators on their initial journey into the asset class. So, I think that's again a really positive thing.
Do you guys worry at all about the whole kind of buy the rumor, sell the fact dynamic? It's one of those financial markets quirks, isn't it? That everyone, Martin, you mentioned that this is the most anticipated product launch probably in the ETF space. Are there any risks there that we are being a bit more bullish than the immediate aftermath, perhaps?
Well, I think the conversion of Grayscale is probably one of those where people might have felt trapped and want to get out. Do they move to Van Eck or another one, or do they just get out? Is a potential, that's a bearish factor. I think we've just got a challenge in terms of digital assets around the macro environment and the interest rate environment. In conversations, and I'm pretty new to this, so I'll hold my hand up that, but when conversations we've had with large institutions, they say things like, why would I go into a risky asset that I don't fully understand when I can get 5-6% in treasuries, right?
Treasury is a
so it's a huge hurdle as well. So there's absolute bullish signals, but there's still a bearish environment that the approval may be launched into.
Yeah, I was just going to say that I think it was yesterday that 10-year yields hit their highest since 2007, right? So that's not very bullish for a risk asset, for the risky assets.
But I think a lot more of this dynamic is going to be pure supply and demand. First of all, the excitement over Bitcoin futures, it happened at one of the peaks. We're now at minimum in a trough. And Bitcoin seems to have held very well, despite all the scandals that are being thrown at it, including FTX. But the sheer size of the US institutional market and financial advisor market, self-directed retail investors, it's enormous. And to have a product that will be accessible to them I'm not going to say it will move the price, but the assets will move into these products. We've estimated, using some of the statistics that came from when the gold ETF was launched in 2004, if anything close to that occurs with Bitcoin and potentially Ethereum spot ETFs, this could be 150 to 200 billion of inflow into these products that swamps.
In a year? Sorry, what's the time?
Yeah, over 3 years.
Over 3 years.
It doesn't happen all at once. That's 3 to 4 times the size of the current product set for listed Bitcoin. So that will be very significant. With regard to yield, Bitcoin, like gold, doesn't have a yield, but Ethereum has rewards. We've recently introduced a staking reward index that is equivalent to a total return index in a bond. So it's inevitable that some of the ETF issuers will have a rate of return on a spot Ethereum. And other products will be developed, including hybrid products that combine crypto with fixed income so that there can be a yield. Indexes that have timing. The ability of the ETF industry and the structured product industry to use their creativity to come up with solutions to what investors want is going to blossom. And I think that's what part of the anticipation is about as well.
I just want to add to that point on the current environment. And I'm going to go a little bit off piece and talk beyond Bitcoin, maybe the crypto as an asset class on a broader level. I actually think right now it's a very healthy environment to be considering long-only exposure. We had a lot of exuberance in 2021, and then after that, de-risking, deleveraging, the yield chasers have left the market, the highly speculative investors have left the market. If you look at Bitcoin, at the money 3-month volatility, it's around in the low 30s. It's very low, so that's kind of akin to tech stocks. So the asset prices have stabilized, and now you're starting to see decorrelation between the different cryptos that are starting to behave more in line with their fundamentals. So when you're considering, governance and operational metrics, etc. This environment as a whole, I think, personally, is a lot healthier than what we had even just 2 years ago for the long-only investor.
Where do you see appetite from professional investors, Christoph? Because you guys have a kind of range of products. I imagine the VC arm is not as active as it was a year ago.
Yeah, well, to be honest, if you have dry powder, it's a good time to be a VC investor. It really depends on the investor's profile. For example, as I mentioned, we launched a fund of fund. This particular fund of fund invests in market-neutral crypto hedge funds. So, there are a lot of, this is kind of off topic, but there are a lot of there's a lot of alpha to exploit in crypto markets, and it's still available. And so, some investors want market-neutral exposure. I think that for long-only investors, it's kind of more in sync with today's theme. The landscape has changed substantially. We're talking about the grayscale product, and we know its structural deficiencies. Now you have over 1,000 long-only products. I think something like 180 billion AUM in these products. You can gain access to single assets, multi-assets, passive, active, liquid venture. So there's a lot of options out there for the long-only investor. So it really depends on their profile.
Are there any particular areas that you've seen that were perhaps less active during when the times were good and more active now, when there are a little bit more of an obstacle course to navigate?
Well, definitely just, if you start simply with long-only exposure, back in the day it was very difficult to gain exposure to Bitcoin. You had to face a bit of a shady exchange or deal with. You said shady, right? Shady, yeah. Deal with your own, your own custody. It's quite complicated, So the fact that you have these ETPs, and to be fair, the market, and Martin, I'm sure you know this, but the market is very fragmented. So you have ETPs, ETNs, ETFs, trusts, AMCs, so actively managed certificates, but you have choice. And in terms of activity, I'm seeing a lot of appetite, or growing appetite again, for liquid strategies, be it market neutral or long only.
Very interesting, thank you. Let's talk a little bit about the landscape today, how institutional investors access digital markets and the appetite, perhaps, the regional differences that you're seeing. Can you tell us where you're seeing new appetite from? We know that hedge funds have been active for a while, family offices. Are you seeing some new cohorts coming into the market?
So the US is behind. We've heard this from several panels here today. But the US appetite, meaning institutional investors, particularly endowments and family offices. So I'm not talking about big public pension funds that are going to allocate 0.5% to crypto. They will be the last. But the family offices and the endowments are very interested. They're asking about products. And again, having spot ETFs will enable the whole product development ecosystem. There's a world of financial advisors who will create products based on these ETFs, multi-asset, et cetera. This will be the anchor for them. In Asia, you are seeing strong interest from institutions, and I think they may actually allocate. So even Asian
the pension funds, even
sovereign wealth funds are interested. So the key from my perspective, and we get requests for all sorts of exotic indexes, will be how to guide the allocation. And one of the ways to ease this institutional money in my opinion, will be multi-asset class benchmarks that include equities, fixed income, some alternatives, and some very conservative slice of crypto, which would be benchmarked to the same indexes that these products are launched on. That will make the decision easier for these institutions and for the consultants that advise them. And we look forward to working on this whole variety of allocation strategies.
Thank you, Martin.
And I think, so the US does have the fact that there is very limited product. I mean, Europe has had product around for a while, right? More so than the US. So whilst we're the first Bitcoin ETF, there are note structures, there are ETNs that have been in existence for a while. And my understanding is, the AUM that's come into those has mainly been from retail. A little bit institution, And as you say, it's more the family offices, the private banks, but it's not a lot of institutional money coming into these products. And so, that's what, as an industry, we all need to develop that, right? We need to work together as an industry to then bring that institutions and move up the ladder in the size of the institutions and the sophistications of the institutions. So, I've had a number of conversations, and the feedback I get is, we know we need to be doing something, but we just don't know what to do. We just don't know how to enter this space, because it's very different for them. The risk models, the way you trade, the way you hold the assets, that all needs to be developed over time. And just the investment case as well. Understanding the investment case for some of the digital assets. It's just, there's a long way to get that understanding out there.
Yeah, I think we need to be a little bit careful when we use the word institutional in crypto. When we're talking about active investors, today, if being transparent, active institutional investors in crypto tend to be high net worth individuals, family offices. It's not institutional in the TradFi sense of the term. We were just talking about this. And then I think the Bitcoin ETF will help accelerate things. And there are some pension funds and endowments that are active in crypto, but it could be much larger. So I think the ETF will be one of the key factors to unlock that wave of investment. When you're looking at different geographies, I would agree the US is on hold in terms of allocators and allocating to crypto and allocating to the space. Maybe the lack of product is one of the reasons. But in Asia, you do feel that they've been through, they kind of have a first mover experience and an advantage there. They've been through several cycles. They've been profitable in crypto. They've lost money. They've been burnt. They've made money again. So there's a little bit more experience there in Asia, and allocators are a bit more active.
Thank you, and I asked everyone on this panel not to say the word education, so thank you, all of you, for doing that. What I'd like to kind of briefly explore before we go to the audience questions is appetite for existing products, because there is a spot ETF in Canada. Martin, you mentioned ETNs and ETPs available in Europe. Why aren't they flying? What are the kind of issues that you think investors are currently struggling with? What is the pitch to a pension fund who says, look, I tried on the VC side, look at what happened to that. The regulatory side is unclear. I don't even know where they're going to trade spot Bitcoin, with like all the questions around some existing platforms. So what are the kind of key issues that you think these investors will have to overcome to have perhaps a bigger appetite for these digital asset products?
I think reputation is been damaged. I still get comments like it's a Ponzi scheme, and Bitcoin's a Ponzi scheme, and and other things. So I think the reputation will need to be improved upon, and that's an understanding of what the issues were that have come up, and so you told me not to use the word education, but unfortunately that is what the larger institutions, they don't know what the assets are. They don't know how to evaluate them from a use case, from a risk management. They've seen the volatility and they just don't want to touch it. Whereas what they need to be told is actually Bitcoin digital assets are a great diversifier in your portfolio. A small allocation to digital assets within your portfolio, you need to look at it that way, not just as a standalone investment, and the benefits that the diversification bring to the risk return profile of your overall investment portfolio.
Is there some research out there to prove this? Because I think a lot of the times, certainly in the past few years, Bitcoin actually moved very much correlated to some of the risk assets.
So there's two types of research. There's the research that is just focused on Bitcoin, and to prove that asset allocation benefit and diversification, a lot depends on your starting point. And as the peaks roll off, suddenly diversification doesn't work. One of the ways we've approached this is having multi-coin indexes, which also diversifies within crypto. Okay. So you get diversification within. We've also created classifications, 8 separate classifications within crypto, so it's almost like sub-asset classes. So we're using the language of institutional investment, of professional investment, to categorize cryptocurrencies. And I strongly believe that I'll try to say this without using the word education. I strongly believe that asset allocation research and seeing how crypto fits with other asset classes is going to be the key to unlock the large institutional investors. On your first question about why hasn't the existing products taken off, some of it has to do with market timing, some of it has to do with size of market. And the United States market is by far the largest market for financial assets. So when it opens up in the US, I believe it's going to have a real knock-on effect, positive knock-on effect in the rest of the world.
In terms of that, a crypto company called Bitwise in the US have done a good study in terms of the returns that, on a rolling annual basis, if you'd allocated Bitcoin to your portfolio 1, 2, 3, I think 4, up to 4%, and going back a long time. So it's a rolling 12 months, not trying to take away just, cherry picking the time period. And throughout the whole of the period that they studied, it was a positive, adding Bitcoin would have had a positive outcome on the portfolio returns. So, and we're doing our own independent study of that as well, because it's going to be one of my selling points to institutions, why they should be buying the ETF that we've launched.
I'm looking forward to reading that.
I just want to bounce off your point about the pension funds that got burnt last year investing in crypto. And you have to feel sorry for the person who was driving the digital asset effort internally, got his investment committee to approve an investment, and then went down the equity route, not the token route. So,
trying to keep it quite
safer, traditional. But we have to underline that had nothing to do with blockchain technology or crypto. Is human fraud. Okay, there's still a stigma attached to those events, of course. I mean, they're quite recent, but there's also a lot of silver lining. And I've been in crypto since 2016. Always on what you would, I guess, call the institutional side. I've known a lot of the custodian guys who are outside with booths from day one, and the dynamic has changed a lot. So they would have to call exchanges and convince exchanges to be on their networks, their off-exchange settlement networks. So it's really hard work. That dynamic has been completely flipped. Now it's the exchanges calling the custodians to get on these networks. And that's driven by the clients who will not trade on these exchanges unless they have off-exchange settlement. So that's a lot, again, it's a lot healthier in terms of the environment to trade and get institutional investors involved. So counterparty risk was always one big question mark. And I think the events of last year actually had quite a positive effect in accelerating the improvement in that space.
I guess my kind of question is, does that, that you mentioned blockchain technology and that it was human fraud. I guess people could say that blockchain technology hasn't prevented human fraud. Isn't one of the selling points of blockchain technology is that you can make it more transparent, you can sort of create a safer and better and more equal marketplace. Do you think that there are sort of still questions around whether blockchain technology is a good thing overall, or that sort of conversation has split completely from crypto?
Well, blockchain technology is going to be applied to security settlement, to tracking art, to tracking, I don't know if there's still stamp collectors, but I believe they exist, but they will be tracked by stamps. I think there's one stamp collector in the audience that I know of. But it's going to improve efficiency and reduce friction. The fraud.
That's what everyone's waiting for, right?
Okay. The ability to still commit fraud with this is because there still have been unregulated parts of the industry. And the fact that a renowned author spent time with SBF and couldn't see anything wrong with his business model shows that it could exist whether 20 years ago or 25 years ago with Liar's Poker or now. So the technology will keep improving, whether it's blockchain or just computer power or the cloud. It's how regulation adopts to the new asset classes. The United States took a very negative approach toward crypto and said you either have to work within our structure or you're illegal, and that didn't really help matters. I think we're going to see a reevaluation of that pretty soon.
I mean, I think there's a better understanding of the technology of blockchain than there is of the crypto assets that, you know, they're side by side. But I'd say people understand that blockchain as a technology has huge potential across a wide variety of industries, not just financial services. And then they move to crypto and digital assets. It's like, not really sure what this is, though. What, you know, what part does this play? And you know, again, it's that.
That's where the
That's what I see in this.
Thank you. Let's turn to the audience questions. Thank you so much for sending them in. I mean, I guess this is going to be a resounding yes, but let's do it. Is the panel as excited for an Ethereum ETF as a Bitcoin one?
Yes.
I mean, look at them.
I'm very excited.
Yes.
Now, coming back to my earlier point about you know, comparing physical spot ETFs to derivative-based ones, in some ways it's even more interesting for Ethereum because at the moment you have some products out there that are based on ETH, you know, futures. They're penalized by the roll there, but also investors are not receiving the staking rewards. So you know, the negative returns there can add up to about 9% per annum, which is quite substantial. So I think that, you know, on and beyond the investment case and the fact that maybe Ethereum has a, you know, broader potential in terms of the different industries it can cover, but I think in terms of if you look at it from a pure product perspective, a spot Ethereum ETF would be well received.
Yeah, I agree. I'm actually more excited about an Ethereum ETF for exactly the reason that Christoph mentioned. One, there's a possibility of a return, and another, which there will be a panel later this afternoon, I believe at the other stage, Ethereum has a higher ESG score or a lower carbon footprint than Bitcoin. And so as ESG starts being considered within the crypto space, even though it sounds almost oxymoronic, it is happening. Ethereum will play a key role in it.
And so, yeah, so the investment thesis is the interesting piece because it's very different to Bitcoin. So Bitcoin, you know, it's a store of wealth argument, and sometimes that's difficult to get across. Whereas to traditional finance people, whereas Ethereum, you know, that can earn money, right? That gets a staking reward. And then you're getting into the more, you know, you can do discounted cash flow modeling and stuff like that, which is
It's kind of
more
more
what the
familiar,
traditional
right?
guys do, right?
Yeah.
I think Fidelity Digital Assets did a really good piece in terms of thinking about a framework of how you value, come up with valuation for Ethereum, which it's difficult to do, right, for Bitcoin.
For Bitcoin.
And just touching on the ESG angle, so you know, we've addressed this in terms of our Bitcoin ETF and the fact we've through buying renewable energy certificates, we've addressed the Scope 3 emissions of our fund and decarbonized the energy usage of the network that the fund is responsible for. So we've directly addressed that because that is an important issue, and you know, Ethereum addressed it through changing to proof of stake. So yeah.
A quick follow-up question on this. Do you guys think that the approval will come at the same time, or will the Ethereum ETF be approved a bit later than the Bitcoin one?
Later.
Well,
Later?
later, maybe, because it depends. There's not as many filings now, but if the SEC decides to do a blanket approval, it just depends when people have put in their filings. If someone's had their filing in for 75 days, it might get approved. So it's either going to be just after or a tie.
I think regulators like to just take things easy, and they'll allow Bitcoin, and then they'll see how that goes. And I think they'll wait a bit before Ethereum. So we had the launch of Ethereum futures ETFs in the US yesterday. You know, they did okay. There wasn't a sort of resounding demand for them, but you know, as an ETF launch goes, actually pretty good. As crypto expectations are not so good. But I think it'll be a while after that, you know, a good few months after before we see Ethereum.
Thank
Spot
you.
Ethereum.
Christoph, do you have any thoughts?
I agree.
So you're
Afterwards,
good.
yeah.
Great. Let's go to the next question, which is quite interesting. What do you think of VanEck's announcement that they will donate 10% of their ETH ETF profits into Protocol Guild, which is a fund to support Ethereum development contributors?
I think it's positive and smart. Supporting.
Is it a marketing tool?
Yeah, but it's could be weaved into the marketing message, but I think on and beyond that, it's actually quite a smart thing to do because supporting the ecosystem will only help grow interest in the space. Depending on what sort of projects are rolled out and the traction that they gain, it can also support the price and interest in the underlying ETF. So, yeah, no, I think it's a good thing.
Are you guys going to do this?
Well,
We'll have to now.
just full disclosure, Market Vector is owned by VanEck, so even
So you think it's a great thing?
even if I wasn't favorably inclined to them, I know it's not just a marketing move because in the announcement, VanEck was very explicit in saying, just as traditional finance will now benefit from the work of DeFi and crypto, we want to give back. So I think it is really much more than a gesture. Is it also smart marketing? Absolutely. But VanEck also decided to price their Ethereum ETF lower than all the others that went out yesterday. So they really want to build the ecosystem. I know that from knowing the people involved in that.
Thank you.
Yeah.
Okay, so we've done that. Compass, FT, Coindex, and now MVIS have launched their ETH staking yield index. How issuers will manage ETP liquidity
I didn't
to
put that
use
question.
this yield due to Q to stake or unstake? Anyone has an answer to this?
I'll just speak from the index provider. Our staking reward index is designed to accommodate the slash rate. So in other words, it's a realistic return that should be fully investable, i.e. fully matchable by an ETF issuer. So we don't expect the first product that would track our staking reward total return index to have any problem because we're realistic about the rate.
Thank
And
you.
I would assume the other index providers did it as well as us, but I can't be sure.
We'll ask them.
Yes.
So the good thing here is that you can have a sort of total return index,
Yes.
which what people are used to, right? So
Yeah.
from an equity perspective, you've got the price return, and then the total return is the the dividend yield less tax on top. So here you can have you get into again more familiar sort of realm of TradFi. So doing a staked Ethereum index and therefore having the ETFs track that is just makes good sense.
It's easy to incorporate, I guess, into your current thinking, right?
Yeah.
Great. I think we've sort of touched on this, but let's go. Gold surged 350% after the first ETF approval. What's going to happen to Bitcoin? I think the audience would like a number. I don't know. Are you brave enough?
Yeah, it will go up between 0 and 350%. I'm 100% sure of that.
That's a very nice range.
Yeah.
Yeah.
We'll go with that.
Yeah.
Yeah.
Any minus?
Or higher.
Good. So yeah,
Not
you see, I
down.
told you we're keen to answer your questions. And the last one we have from the audience is, what is the prospect for a multi-asset crypto ETF?
Well, that's 100% going to happen. So again, in Europe, you have multi-asset crypto notes, ETNs, today. There's definitely the proof of concept out there in Europe. And yeah, I think again, there'll be regulatory. The issues there of doing those is on the regulatory side.
Yeah.
What will the regulators allow? What do the exchanges allow? So I think my understanding is that the exchanges today in Europe, the top 10 is okay, but then they start to get concerned around liquidity. As an ETF provider, you have to look at liquidity. You've got to be able to, you've got to be able to come in and out in decent size every day, because potentially that's what's going to happen with an ETF. So that's the critical factor: is what's the liquidity of the underlying coins. And we have to look at volatility. We have to look at liquidity, because that's what regulators look at, and so we need to do that. But absolutely, they'll be here.
Yeah.
You're confident, yeah.
No, just to add to that, I think it comes back to the diversified versus concentrated debate. You know, crypto is quite a unique market where 70% of the market cap is concentrated in BTC and ETH. But then you could think that's a pretty good proxy, but essentially you're missing out on a lot of the themes that are out there and that will see, I think, quite important growth going forward. So a multi-asset crypto ETF, I think, is, again, the prospects for that are quite positive.
Yeah, I mean, ETFs are tools for people to invest in the marketplace, and they're meant to make life easy for people. And so you can't just offer a Bitcoin, Ethereum, a Solana, a Ripple, whatever it is. You've got to bring that together to make it nice and easy for them if they want the diversified exposure.
Yeah.
Well, we're going one step further in multi-asset indexes. So, of course, there's the logical gold plus Bitcoin, or multi-asset equity, fixed income, and crypto. But we're also exploring thematic indexes. So, for example, we have one of the world's most popular esports index that goes very well with metaverse-related coins. So we're going to look in the thematic space as well for this. I have no doubt that these indexes are going to be popular with issuers as the approvals start rolling.
Yeah.
Thank you. And we're going to just, I need to squeeze this question in. Just very briefly, guys, do you think that the crypto market structure as it is today ready for this spot ETF? Christoph? Does it need to change?
It is ready. It's fine.
It's ready.
I think it's ready, yeah.
Fine.
There's liquidity.
Yeah. There's plenty of liquidity providers, traders trading this who are embedded in the ETF infrastructure.
And also the ecosystem for ETFs in the US will test it. Nobody's going to launch the ETF without the APs, market makers, going through the testing. The existence of futures will help as well. So it is ready, and bring it on.
Well, you heard it here first. We are ready. So please join me in thanking the panel, and thank you for not saying education. Thanks very much.
only
Thank you.